Something important has changed underneath this market, and most investors are still looking at the stocks instead of the force actually moving them. If you own NVIDIA, Microsoft, Micron, or any major AI stock, what happens next week could change whether you should be adding risk or cutting it. And the answer may have much less to do with AI earnings than most people think. Last week, the Nasdaq 100 fell 2.45%. While the Semiconductor index dropped 5.45%, significantly underperforming the S&P 500 and the Dow Jones Industrial Average. At the same time, optimism continued around Microsoft's AI commercialization, memory chips still face strong demand, defense technology companies secured long-term government contracts, and Bitcoin also posted a sharp gain. These developments may appear to belong to different markets, but they are connected by the same underlying variable. Long-term capital is becoming more expensive globally. The US government needs to issue debt to finance fiscal and defense spending. AI companies need to raise funds for data centers, electricity, and chip development. And the defense industry also needs to expand production capacity. When different sectors compete for long-term capital at the same time, bond yields naturally need to rise, and the stock market begins to reassess whether each company can turn capital investment into orders, revenue, and free cash flow. Therefore, the market's next focus is no longer simply whether AI will continue to rise, but which companies can keep generating returns in an environment of high capital costs. First, let us look at the most important stock next week, NVIDIA. NVDA will report earnings after the market closes on August 26th. This report will test not only NVIDIA itself, but also determine the near-term direction of the entire AI supply chain. The market needs to verify 4 things. First, whether GPU orders continue to exceed supply. Second, whether next quarter's revenue guidance can be raised again. Third, whether gross margin can remain stable during product upgrades and supply expansion. Fourth, whether the major cloud computing customers are still willing to maintain high capital expenditure. If NVIDIA delivers strong revenue, stable gross margin, and higher guidance, and MU, AVGO, and the Semiconductor Index all rise after the report, it will show that the AI order thesis remains valid and that capital may return to the chip and infrastructure sectors. However, if NVIDIA beats expectations but its share price and the Semiconductor Index fail to rise, investors should be alert to the possibility that the good news has already been priced in. At that point, the variables truly driving the market will no longer be earnings, but valuation and long-term interest rates. Therefore, it is not advisable to use excessive leverage to bet on a single direction before the earnings release. A better approach is to wait for the results, observe whether the stock can hold its post-earnings gap, and confirm whether the semiconductor sector is rising broadly. The second stock to watch is Microsoft. What distinguishes Microsoft from many AI concept companies is that it has already built a relatively complete commercial loop. This means Microsoft's AI investment is supported by its existing businesses, operating cash flow, and enterprise customers. Even if long-term interest rates remain high, its financing capacity is clearly stronger than that of data center companies that depend on external capital. From a medium-term perspective, MSFT remains suitable as a core watchlist name on the AI platform side. From a trading standpoint, however, it should not be chased while yields are rising rapidly. If the 30-year US Treasury yield breaks above 5.3% again, Microsoft may face valuation pressure from the higher discount rate, even if its fundamentals have not deteriorated. A more suitable way to build a position is to wait for the stock to pull back to an important price platform or a medium-term moving average, then enter in stages after volume contracts and the price stabilizes again. The third stock is Micron, or MU. MU represents the memory bottleneck in the AI supply chain. As data centers expand, AI servers need not only GPUs, but also increasing amounts of HBM and DRAM. In the past, Micron was often viewed as an ordinary cyclical memory company. Today, HBM demand has increased the value added of its products and may also improve the company's gross margin and long-term valuation. From a trading perspective, investors need to watch MU's relative strength against the Semiconductor Index. If NVDA reports strong results, MU breaks above its previous trading range on heavy volume, and it continues to outperform SOX, that would indicate capital is extending from GPUs into HBM, and traders could participate in the trend. If NVDA delivers strong results, but but MU remains weaker than the semiconductor index, it would suggest that memory demand may already be priced into the stock, or that investors are beginning to worry about new capacity and the top of the cycle. The fourth clue comes from the AI memory trade in China and South Korea. Some capital has already moved from Chinese AI assets into Samsung and SK Hynix, indicating that global investors are more willing to prioritize picks and shovels companies whose orders and price increases can be directly verified. Over the coming week, the market will face two tests at the same time. The first test comes on August 26th. Before the market opens, the United States will release its revised second quarter GDP figure and July PCE inflation data. After the market closes, NVIDIA will report earnings. PCE and GDP determine the discount rate used in stock valuations, while NVIDIA determines earnings expectations for the AI industry. One affects the denominator of the valuation formula, and the other affects the numerator. The second test comes on August 28th. Federal Reserve Chair Warsh will speak at Jackson Hole. What the market truly needs to hear is how the Federal Reserve will address the tension among inflation, fiscal pressure, and long-term Treasury yields. If PCE is benign, NVIDIA raises its guidance, and Warsh does not further reinforce expectations of a rate hike, AI and semiconductors may regain market leadership, with NVIDIA, Micron Technology, Broadcom, and Microsoft emerging as the main beneficiaries. If NVIDIA's results fall short of elevated expectations, PCE runs hot, and the 30-year Treasury yield breaks above 5.3%, the semiconductor correction may spread across the Nasdaq. In that situation, investors should reduce high valuation growth positions and increase cash, short-duration assets, and defense companies supported by contracts. Therefore, the core of this week's trading approach is not to guess the earnings result in advance, but to observe how the market reacts to it. If long-term yields rise while credit spreads remain stable, the market is still experiencing sector rotation and there is no need to turn broadly bearish. If long-term yields and credit spreads rise at the same time, the market may be moving from a valuation adjustment into genuine deleveraging. In the next stage, stock valuations will no longer be determined only by the scale of capital expenditure, but by whether that expenditure can generate orders, whether those orders can generate profits, and whether those profits can ultimately be converted into free cash flow and return on invested capital.